So ayan, we have already computed our segment margin. Now let's proceed to our second learning objective, and that is to compute ROI and show how changes in your sales, expenses, and assets affect your ROI. ROI is return on investment. So as I have mentioned earlier, yung dalawang responsibility center natin, yung profit center and your cost center, pwede mo namang i-assess yung performance ng mga centers na yon using standard costing. Now, for an investment center, hindi talaga po pwede yung standard costing. So, ano yung mga tools that we can use to assess the performance of the manager or the one leading a particular investment center? So, yung pinaka-common na ginagamit ng mga businesses in assessing the performance of an investment center is they are using ROI or return on investment. Your ROI is computed as follows. You have a numerator, which is your net operating income, and your denominator, which is your average operating assets. Net operating income is defined as income before interest and taxes, or we call that EBIT. So, ito yung sinasabi ko sa mga previous students ko, so that they won't get confused, tawagin na lang nila niyang NOI EBIT. Okay, so NOI EBIT, so that they will know that NOI is equivalent to EBIT. So some financial statements, they're using net operating income to describe your income before interest and taxes. Although there are financial statements na ang ginagamit talaga nila is income before interest and taxes, or EBIT. Instead of using the word income, they are using the word earnings. So, income before interest and taxes, earnings before interest and taxes, or net operating income, they mean exactly the same thing. So, that's your numerator divided by your denominator, and your denominator in this case is your average operating assets. So, what are your average operating assets? The common assets that you know of, just make sure that you are using those assets in the current operations of the business. Now, what if you have an idle land? So, that is not an operating assets kasi nga by nature, it's idle. Ibig sabihin, nakatiwangwang lang and walang gamit. So, it's not part of your operating assets. So, what qualifies as an operating assets? Dapat yung mga asset na yan is being used in the current operations of the business. Now, talking about ROI, we know already the denominator to be your average operating assets. The next question now is, what value should we be using? Should we use the net book value or your gross amount, especially if the asset is a non-cash assets, particularly a property, plant, and equipment? So the question is, should we use the net book value or the gross amount in the computation of your operating assets? Most companies, ang ginagamit nila is the net book value of your depreciable assets. So instead of using the gross amount, what they are using is the net book value. So, yun yung ginagamit ng most companies ha. Although, if you have your own business later on, you can still use the gross amount. Wala naman itong clear-cut rule. I'm just saying that most companies worldwide are using the net book value. So, let's understand your ROI. Yung ROI ninyo has two components. One is margin, the other one is turnover. Margin is computed as follows: net operating income divided by sales. So, margin is telling us your percentage ng net operating income vis-a-vis your sales. Turnover naman is telling us how many times nakapag-generate ng sales yung invested assets ninyo in that particular segment. So, margin. When you multiply that with your turnover, we come up with your return on investment. Now, if you look at the formula ng margin as well as ng turnover, meron silang common item. So, ano yung common item nila? You have their sales. For margin, that's a denominator. Now, for turnover, that's a numerator. So, using our knowledge and algebra, diba? Kasi mumultiply lang naman natin yung margin with your turnover. We can cancel out sales. So, the shortcut version in the computation of your ROI, you just get your net operating income and then divide it by your average operating assets. But I would really appreciate if you will also familiarize with the different, with the two components ng ROI. One is margin and the other one is turnover. Because minsan, yung binibigay sa atin sa board exam or sa summative exam na lang ninyo, bibigyan lang kayo ng margin, bibigyan lang din kayo ng turnover. So, if you don't know the relationship ng margin and turnover in the computation of ROI, baka mahirapan tayo. So, yun. And aside from understanding the relationship, what do you call this? Mas ma-appreciate din natin yung ibig sabihin ng ROI by looking at your margin and your turnover formulas. Now, having known the formula in the computation of your ROI, either the shortcut version or yung long cut version of multiplying margin with turnover, and knowing also how ROI can be used to assess your performance, especially if you are an investment center manager. So, of course, you want an ROI na mataas if ikaw nga ay isang investment center manager. So, you ask this question, what should I do to increase my ROI? So, if you are familiar with the formula ng ROI, definitely you will be thinking of 3 ways to increase your ROI. One is to increase your sales, because by increasing your sales, you will be increasing your turnover, and at the same time, you will also be increasing your margin. Bakit tataas din yung margin mo? Say, for example, expenses are still the same, and then you get to increase your sales, then of course, your net operating income will increase. If you don't want to increase your sales, another way to increase ROI is to reduce expenses. And the third one, if there's nothing you can do with sales and expenses, then you can reduce the amount of invested assets. Or you can do all three. One, increase sales. Second, reduce expenses. And three, reduce assets. If you can do all three, definitely, your ROI will increase. Ma'am, what if isa lang pwede kong gawin dyan? Then, you can also notice that your ROI will also increase. So, ito yung 3 ways to increase your ROI. Take note of them. Kung hindi man matitake note, at least familiar kayo with the formula. Kasi pag familiar kayo with the formula, definitely you will be able to think of this 3 ways to increase your ROI. So, let's have an example here on how to increase your ROI. So, you have here Regal Company with the following information. Net operating income niya for the period is 30,000. Average operating assets is 200,000. Sales is 500. While operating expenses is 470. And we are asked, what is the company's ROI? So, knowing the formula for your ROI, that's margin multiplied by your turnover, we can now compute for the ROI ng Regal Company. So, the ROI ng Regal Company is 15%. How was 15% computed? Take note, your net operating income is 30,000, while your sales is 500, and your average operating assets is 200,000. So, 30,000 divided by 200,000, that gives us 15%. Or, when you compute your margin is 6%, while your turnover is 2.5. So, when you multiply 6% by 2.5, we get 15%. Or yun nga, yung shortcut is 30,000 divided by 200,000. So, as we have computed, the current ROI for Regal Company is at 15%. Now, say for example, let's assume that Regal's manager invests in a 30,000 piece of equipment that increases sales by 35,000, while at the same time also increasing operating expenses by 15,000. Let's see what will be the effect of this action to the current ROI ng Regal Company. So, the net operating income now will be how much? 50,000. Bakit siya 50,000? Because there will now be an additional 20,000 increase in your net operating income. Ma'am, how did you arrive with additional 20,000? Your sales will increase by 35 and correspondingly there is an increase in your operating expenses of 15. So 35 less 15, that's an additional 20,000 in your net operating income. Average operating assets naman on the other hand will also increase. How come it will increase? Because the manager invested an additional 30,000 for a new piece of equipment. Sales, as mentioned, it will increase by 35,000 and operating assets will increase by 15,000. So your new sales level is at 535 and your operating expenses is at 485,000. Now let's see what will be the effect of this action to the ROI. Let's calculate now your new ROI. So, substituting with the given dito sa formula, we can see that the new ROI increased from 15% to 21.8%. 21.8%, or that is equivalent to how many percentage points? That is 6.8 percentage points. Even though the use of ROI is a good tool in assessing the performance of your investment center manager, meron pa rin itong criticisms. One is that um, the management team may not know how to increase ROI or baka yung action nila is not consistent with that of the entire organization. That is why ROI works well if meron kang balanced scorecard. Another criticism for ROI is that may mga managers kasi nakaka-promote lang nila kasi nag-retire na or nailipat na yung head ng isang investment center. So, these new managers may inherit many committed costs over which wala naman siyang control because this cost, ang nakapag-commitment niyan dati pa is the old manager. Anong example nito? Bumili ng property, plant and equipment, service vehicle, equipment, machinery. So, those are, ang depreciation nun is considered as a committed cost kasi nga andyan na sila, diba? Pero, nabili yung mga assets na yun before pa dumating itong bagong manager natin. So, gusto niyo man or hindi, those costs are already committed and there is no way for him to reduce those costs. Third criticism is that your manager is evaluated on ROI. May possibility that he or she would reject profitable investment opportunities. Lalo na even if yung project is profitable, pero negative naman yung effect sa ROI ng kanyang investment center. Say for example, an investment center is already enjoying a 15% ROI year in, year out. Tapos here comes a new project that will only yield an ROI of 10%. So since this manager is already enjoying 15% ROI every year, may tendency talaga na i-reject niya yung bagong project because this new project will only give an ROI of 10%. So definitely mapupull down yung kanyang existing ROI. So that's what we mean by the third criticisms ng ating ROI. Criticisms on the usage of ROI. Now, after we have discussed ROI, let's take a look at another tool. So that brings us to learning objective number 3, and that is to compute residual income and understand its strengths and weaknesses. Residual income is another measure of performance. So meaning this is another tool that you can use to assess the performance of an investment center. Residual income is the net operating income that an investment center earns above the minimum required return on its invested assets. Now let's take a look at the formula on how to compute for your residual income. So if you can see on that slide, residual income is computed as net operating income. You get your net operating income, and then you deduct the product of your average operating assets multiplied by your minimum required rate of return. So kung nakapag financial management na kayo, normally the minimum required rate of return that we use in the computation of your residual income is the weighted average cost of capital. So, residual income is different yung kanyang computation on how you compute your ROI. Because ROI measures net operating income earned relative to the investment in your average operating assets, while your residual income naman measures net operating income earned less the minimum required return on average operating assets. Now, nabuhay itong residual income na tool because nga of the various criticisms of your ROI na tool. Now, if you will ask me, ma'am, between the two, which do you favor? Um, I don't exactly favor one, but I suggest the usage of residual income and ROI. You can use them together. Pwede naman silang hand-on-hand na gamitin mo. So you can use ROI and residual income at the same time just to, what do you call this, just to avoid any disadvantages ng pag-usage of ROI alone. So let's have an example here so we will understand and be able to execute also how to compute for your residual income. So we have here a retail division of Zephyr Incorporated. Meron siyang average operating assets of 100,000 and is required to earn a return of 20% on these assets. In the current period, the division earns 30,000. So with this information, let's calculate our residual income. So by using the information given, we have here operating assets of 100,000. So ibig sabihin, the business invested 100,000 in this particular segment in the form of operating assets, and then the business would like to have a return of 20% on those operating assets. So ibig sabihin, happy na yung business if this particular segment can give a return of 20,000. Kasi nga 100,000 yung binigay niya as operating assets to this particular segment. So in exchange, the business would like those assets to earn and give the business how much return at the end of the day? 20,000, equivalent to 20%. Now, if we take a look at the actual performance of the business, the actual income of the business for this particular period is 30,000, which is way higher than the minimum required return of just only 20,000. So we have a residual income of 10,000. So yun yung ibig sabihin, di ba? Residue, excess. So that's excess income over the minimum. So how much is the minimum being required by the business in this particular illustration? Only 20,000. And then how much
actual income did we actually give to the business 30? So we have a positive residual income of 10,000. So talking of residual income, ano gusto natin makita? Of course, we want a positive residual income. We want that the actual income to be provided by a segment is higher than your minimum required rate of return. No, ma'am, what if it is only the same? So residual income natin zero, that is still good. For as long as it will not fall below the minimum required of return. So if you assess the performance of your manager and then you see that the residual income is positive, then that would mean this particular segment is doing a good job. So, very clear yung pagsabi ng good and not so good, no? ROI naman, the same rin. Yung madali lang din naman magsabi na maganda or hindi maganda yung kanyang performance because, yun nga, pag nakapag financial management ka na, you know already your weighted average cost of capital. So, all you have to do is compare lang your ROI with your weighted average cost of capital. So if you see that ROI is higher than your WACC, then this particular manager is doing a good job. If it's lower, then maybe he needs or she needs to step up his game or her game para naman, what do you call this, makaprovide siya ng mas mataas than the weighted average cost of capital. Now, for my BM students, I don't know if you have taken up already financial management, but I am definitely sure that for the accountancy students, nakapag-financial management na kayo nung summer. Okay, so, ayan. Makita natin, may tao dito sa slide, may parang hurdle. So, the hurdle is your minimum required rate of return. So, for as long as you jump over that hurdle, you will give me a residual income, a positive residual income. Now, if you recall, di ba sabi natin earlier, one of the criticisms ng usage of ROI is that may tendency yung manager to reject profitable investments. So, with the use of ROI, maa-address na natin yung criticisms with the use of residual income, we are now able to address that particular criticism because with residual income, it encourages managers to make profitable investments that would be rejected by managers using ROI. Kasi if you notice, di ba yun ang tinitingnan natin for as long as the project, yung kanyang expected return is higher than the minimum required return, then the project is acceptable. Sa ROI kasi, may certain constraint na siya, especially if alam ng manager na I will be evaluated using my ROI. So yung sabi ko nga kanina, if I'm already enjoying 15% tapos here comes a new project that will only give me a 10% na return. So sasabihin ko yung 10 na yon, it will pull down my existing 15%. Now what if yung 10% na yon is higher than your minimum rate of return? Let's say the business is only asking you to give a return of 7%. 10 is better than 7%. But then you're already enjoying 15%. Meron ka ng prestige. More than double yung binibigay ko sa inyo. Tapos, tatanggap ako ng project na yung return is mas mababa sa 15%. So, mag-shy away doon yung mga ROI managers. Pero if your manager is aware na yung kanyang performance will not be evaluated just by plain using of ROI, kung alam niya na the business will also reward me if I can deliver better than the minimum required rate of return, then this manager, hindi na siya mag-shy away from projects na even if mas maliit sa kanyang existing ROI, for as long as that this particular project, the return is higher than the minimum rate of return being required by the business. By the way, baka ma-confuse kayo. When I say rate, I'm referring to percentage. Pag sinabi ko lang return, I'm referring to the amount. But if you notice naman, kung balikan nyo yung previous slide, basically they mean the same thing. 20% is 20,000 for a 100,000 investment. So I hope walang confusion. Now, even if the usage of residual income in assessing the performance of your investment center is a really, really good tool, meron pa rin itong disadvantage. So, ang sabi dito, the residual income approach has one major disadvantage. Ano ito? It cannot be used to compare the performance of divisions of different sizes. That's why if we go back dun sa earlier question ko, which of the two ang piniprefer ko, my answer will still be the same. Gamitin natin sila sabay, okay? You can use ROI and residual income in assessing the performance of your investment center so that whatever criticisms meron ng ROI, ma-address ng residual income. And then in comparing naman divisions of different sizes, you can use naman ROI. So for whatever disadvantages meron ng isa is the advantage naman ng isa. So, I think residual income and ROI, they perfectly complement each other. So, why not use both of them at the same time in assessing the performance of our investment center heads? So, let's have here an example para mas ma-appreciate ninyo na mas maganda talagang gamitin yung ROI and residual income ng sabay. So, meron tayong additional segment na nilagay dito. We have the wholesale segment. So, for the wholesale, the operating assets invested by Zephyr Incorporated is 1 million. And then, if we recall again, the required rate of return ng Zephyr for the investment centers is 20%. So for retail, yung amount nun is 20,000, yun yung kanyang nire-require na return, while for wholesale, the minimum return that is being required by Zephyr is 200,000. Now, if we compute for the residual income nilang dalawa, retail gave us a residual income of 10,000 as we have computed earlier. Now, for wholesale, say for example, the actual income for the wholesale segment is 220 and the minimum required return niya lang based dun sa taas na computation is 200,000. So, therefore, the residual income of Zephyr Incorporated for the wholesale segment is 20,000. So, if you notice, your residual income numbers suggest that your wholesale division outperformed the retail division. Kasi nga, yung kanyang residual income is 10,000 higher. However, the retail division earned an ROI of 30% compared to an ROI of 22% for the wholesale division. Now, if you ask me, Ma'am, how did you arrive with the 30% and the 22% ROI for retail and wholesale divisions or segments? 30%, paano ko na-compute yan? O, balikan natin yung formula for the computation ng ROI. So, income of 30,000 divided by your operating assets of 100. So, 30 divided by 100, that's 30%. For wholesale naman, the 22% is computed as follows. Income is 220, operating assets is 1 million. So, when you compare division or segment na magkaiba yung size nila, hindi enough na residual income ang gamitin natin. It's better to use your return on investment or ROI. So, I'm sure this is a good example para ma-appreciate natin yung sinabi ko na ROI and residual income, itong dalawang tool na ito are perfect complement. They really complement each others. So, I hope when you become managers, owners later on, hindi lang isang tool in assessing the performance of your investment center ang gamitin natin. I hope you can use silang dalawa.